All right, here again today with Jennifer Ellis from First United Bank. She's a mortgage loan officer there and is going to talk to us today about the lending process in the climate of coronavirus pandemic and how things have changed. Jennifer, thanks for coming and joining us
Thanks.
again. I
You
understand,
bet.
a lot of lenders have started to tighten up a little bit. Tell me more about that.
So obviously we're in kind of unprecedented times. And as the pandemic has kind of gone on for the last couple of months, it's affected the stock market. It's affected the mortgage-backed securities market. So those things in turn affect us. The rates have just, kind of plummeted, and the demand for selling mortgages on mortgage-backed security markets has kind of been eliminated. So it's a difficult time for lenders. We've got unprecedented volume, so we're super busy, which I like. It's good. Rates are like astronomically low, which is great for our buyers. It's great for our sellers too, because then that increases the market. But it is made Fannie and Freddie kind of tighten things up a little bit because there's so much uncertainty in the market. So we'll see things like increased credit score requirements. There's additional documentation that is required now that wasn't previously, and a lot of that has to do with COVID and making sure that people are still employed at their job and not furloughed or laid off during the process. So there's just a lot of extra work involved in getting that home loan closed these days that we didn't have just 5 or 6 months ago.
And as of today, which is May 28th, 2020, what are rates today, and have you ever seen them as low as they are now, or how they have been as low as they have been since coronavirus?
They are a little higher today than they were when the whole kind of pandemic blew up in late March, but they are still like an FHA rate is still 3.125. So still really, really, really low. They did dip below 3% for a short while a couple of months ago, but my first home loan was 9%, and it was a variable loan, and that was in the 90s. So
oh my gosh,
they're really, really low. I mean, there's
yes.
a great time to buy.
Yes, absolutely. Okay, so the other piece of the puzzle here is your credit score, though. And as you mentioned, a lot of these loans are requiring a higher credit score since the pandemic.
Yeah, so you're seeing some credit score increases, anywhere from increasing it to 640, where maybe an FHA loan used to be available to credit scores 580 or 600, and now some lenders have gone to 620 or 640. You have seen some of the jumbo loan market kind of disintegrate. So buyers in that upper echelon, above 550 on loan amounts, there are not as many lenders out there doing those because they're higher risk. We're still doing them, but there has been a lot of tightening in that market. Or some lenders are seeing some conventional credit score increases as well. There are a couple lenders out there I know that are not doing conventional loans under 710 or 720, which is a pretty high score requirement. So, and that is just to mitigate risk. So it's just to make sure that they're being as conservative as they need to be.
And I read somewhere at least one lender was also requiring 20% down for a conventional now. Is that more common? And you had to have, I think, a 700 credit score and 20% down?
I mean, I've heard about some things like that as well. I've not personally experienced that situation, but again, it's called an overlay. So a lender can have an overlay that says they want to see more money down, or they want to see a higher credit score, or they want 3 years worth of tax returns instead of 2 years. I mean, they can all do that. But again, it's all to keep, risk factor down, mitigating that risk for foreclosure up front instead of.
And how long do you think things will be like this? Do you think they will loosen up their requirements on credit score and down payments in the near future?
I feel like, I don't have my crystal ball out, but I do feel like we'll probably see some changes here before too much longer as the country starts to open back up. In the previous recession, it took quite a while to get back for that pendulum to swing back, more towards the middle. But that was a different situation and a different type of recession. But we're already seeing, it's kind of a constant. My fellow lenders and I would definitely say that our reading has gone up every day because we have to, we're constantly getting changes and updates. So we're already starting to see a little bit of loosening on some stuff. But, I would say in the next couple of months, we'll be able to tell how long that's going to go.
And how are you feeling, just optimism wise, with how busy you've been? At least for me as a realtor, my sales have not really slowed right now. I am very, very busy. And I suppose it's because supply and demand and those credit or the rates are so low.
Right. And I feel like, I've been working the whole time and I've probably got as much in my June pipeline as I've ever had in my whole career. So it is, again, unprecedented, and I'm feeling very confident that the housing market, again, which is totally different from the last time we had an issue, is very strong, especially in the Tulsa market right now. So I don't feel like, even with the restrictions in some of the credit score and the down payment, it's not affecting buyers buying, and therefore not affecting sellers selling. And we are still very low on inventory, as you can
Yeah.
attest to. So I feel like we'll be strong through the end of the year. I really, really don't see it slowing down any.
All right. Good news. And if somebody wants to talk to you about getting a loan, what do they need to do? How do they go about that?
Yeah, best way is to call or text me at 918-787-1046, or you can also go to my website at jellis.firstunitedteam.com, and all my contact information is there as well.
All right, Jennifer, thank you so much for all the
Thanks.
information. All right, talk to you soon.
Alrighty, bye-bye.